Markets Now is brought to you by the 5-year anniversary of Brevant Seeds. Here's to 5 years of not just winning, but collecting one game-changing W after another. See all of our wins at Brevant.com/wins.
Well, grains ending lower on Wednesday. Dan Bossie with AgResource joining us. And Dan, we really kind of faded these trade deals in the grain sector. Is that just because we don't really know a whole lot in terms of details?
I think you're right, Michelle. I think we're lacking details on these trade deals. You know, we look back to the UK trade deal of May 8th. It was announced a long time ago. And we're still basically in negotiations with the United Kingdom. And so although we have frameworks for trade deals and the Trump administration saying, you know, we're going to give you a tariff rate that's higher than where we are today, which seems crazy to even say that. But many of these trade deals are being done at 15 or 20%, which is above the 10% level today. We just haven't filled in all of the spaces, if you will, on the agreement to understand what it means for corn, soybean, wheat, or other commodity demand. And so with that, the traders are taking the attitude, it's another trade deal, but let's see the demand, and they want to see that coming forward.
How long do you think it will take either to finalize the deals or to see that demand materialize that you just talked about?
I'm sorry to say it may be months, possibly, Michelle. I worry that the devil is in the details on these trade deals. And in fact, as you think forward, we may still be negotiating these well into the end of the year. So the framework is there. But when you get down to the codification of individual commodities or what needs to be bought or not bought, that takes a lot of time. So if this is just a broad agreement without any codification, then we and traders are even more worried because there's no promises that can be, let's say, adhered to from a financial standpoint. So we'll see how this all goes, but just having a trade framework is not enough to culminate in commodity demand.
And we still do not have the big trade deal done that the market's waiting for, which is China. Talk of maybe some talks next week, but this export window is starting to close for beans, isn't it?
It really is. And in the last week or 10 days, I'm told from my South American contacts that the Chinese have sold 50 cargoes or nearly 3 million tons of soybeans for late September, October to the Chinese. So if Brazil and Argentina is selling those kind of quantities, the Chinese are not looking at the U.S. market. And what really bothers me is the prices they're paying in Brazil and Argentina are above the U.S. Gulf. So the Chinese are avoiding us on purpose. That's a concern. It really cuts into the heart of the U.S. sales program as we look at the harvest timeframe, weakens basis levels. So this is something I think we all need to watch going forward is where does China buy its beans at the moment? No evidence of coming back to the U.S. Gulf.
Yeah, they have bought no U.S. soybeans so far for the new crop marketing year. Will they have to buy any from the U.S.?
I still suspect they will have to buy something, maybe in the range of 8 or 10 million metric tons, chance of 12, but that's well below recent years where they were buying 22 to 25 million metric tons. So again, if you take 10 million tons out of the balance sheet to China, that adds around 360 million bushels. My export estimate in a new crop position is 1.5 billion bushels. That compares to USDA at 1.765. So I'm down 265 million bushels already from where the USDA is, just based on what we're feeling on Chinese demand.
And any new demand that we get from crush or biofuels is not going to be big enough to offset that, right?
Right. We are maximized right now on U.S. crush capacity. So the USDA's estimate is nearly at full capacity. So additionality from that is not coming. This makes the export side of the equation so important. On the other side of that, if you did have a yield decline, let's say below 52 or 51 and a half bushels an acre, that would make that crush more bullish. But today, Michelle, it's really about exports and the size of the U.S. bean crop. So as we have a bigger yield, we need to see more export demand, and that's all about China.
The other headwind for the corn and soybean market has been the high crop ratings and the idea that this crop is getting bigger.
Yeah, I think as you look at crop ratings, we are using in corn a 184 to 189 yield estimate today. I know it's a wide range, but we're at that time of the year where there is uncertainty in estimates till we get that USDA crop report on the 12th of August. And that crop report is not a field survey, it's a farmer survey, just to be clear. But we do give farmers a lot of expectations that it will be a good measure of the crop. As we look forward, though, again, it's that August estimate and then September estimate when they go into field where we really nail down how big is big in terms of the U.S. crop. Until then, unless there's a weather threat, I think that's what this market discussion is all about. where can yields be in the final count based on the favorable weather pattern to date.
Absolutely. We are not really trading these pollination issues, it doesn't look like yet, in the corn market. When will we? Will it take till September or later, do you think?
I'm not sure the pollination issues are big enough to be really a market factor. I mean, they could dent some yield in certain states. The pollination issues seem to be domiciled in Illinois, Indiana, potentially Kentucky. This is where that rapid growth occurred. But whether it's, we're just finding it in a couple varieties, if you will, of corn, and it's not widespread. So again, when we go through these states, we talk to agronomists or we visit fields ourselves, we are not seeing the kind of losses that would get the market excited in terms of maybe more than something like 40 or 50 million bushels, which when you're talking about a 16 billion bushel crop is just not enough.
So basically you're only talking about maybe 1 to 2 bushel per acre yield loss overall then?
Yeah, it's a modest amount, maybe not even a bushel. If you think about a bushel loss, that'd be about 80 million bushels. We're something less than that. So when you spread it out across the entire Midwest, it's something to watch, but I don't think it's something that will be a bullish lasting factor going forward.
Tell me what your yield projection is now on corn and what is the market trading at this point?
Well, we're at 184 bushels an acre. We're taking the lower end of our range. We're trying to be conservative because we know the importance of the first 2 or 3 weeks of August in terms of weather. At a 184 yield, we do end up with corn end stocks above 2 billion, about 2.3 billion. That would model out the corn prices maybe sliding back to last year's low, give or take 10 cents, around 360 a bushel. So that's kind of our mindset. Unless something dramatically changes in terms of weather conditions, it's still a bearish landscape with corn still having downside potential.
And soybeans are an August crop, so we have a little time to wait before any yield adjustments start coming into play there, right?
Yeah, I'm still sitting at 52.5 to 53. We can put a little in there for the favorable soil moisture conditions, but it's August that will determine soybean yields. So let's not be too judgmental on the crop today. We'll need to see the first 4 weeks of August weather before I can make any assessment that would make a difference.
But at the present time, do you think last week's lows are vulnerable in both corn and soybeans from a technical standpoint?
I believe that the trend is your friend, as we say, and the markets are still heading downwards. And I don't see reasons for that to change in the dog days of summer. So as we think forward, I'm still believing that maybe the range of soybeans is all the way down to 530 or so in terms of a seasonal low. And corn, I mentioned somewhere in that range of 360, give or take a dime. So unless there's something dramatic in weather, those are kind of where our mind is set in terms of seeing the market bottom and then getting to a demand building phase longer term.
Another disappointing day in the wheat market. Tell me why you think that this wheat market is having such a difficult time bottoming.
Well, part of the problem is that we have an additional 17 million metric tons of wheat in the EU and Black Sea. But part of that Black Sea wheat crop is impacted by bugs and poor quality and lower yields. So we've seen a sharp rally in Russian wheat, now up to $249 here recently. That's up about $20 a ton, or close to like 70 cents a bushel. But the Russians are expected to find better wheat quality as they go northward. So if they get to central Russia, we expect yields to improve, quality to improve. But that's when this additionality from EU and Russia will come together. And that's why the wheat market really can't get off its back too much here. I would say that if you get December wheat back to Chicago wheat, back to something like 580, 590 a bushel, that's about all we can see to the upside right now.
More contract and all-time highs in both live and feeder cattle futures today. The funds have been pushing this thing. In the live cattle, is it just because of this big discount to the cash, or is there more to it?
I think there's a little more to it. We're getting news that some of the funds can expand that trade on indexes, can expand their position limits and maybe take on a few more positions. And I think they're looking at cattle and feeder cattle as being a bullish longer-term opportunity. I think all of us agree with that. The question today I have is the beef market's really starting to struggle here. So as we go forward, will the consumer continue to embrace the very high retail price of beef? And will that give us any backfill, if you will, in terms of the relationship between the packer and the feeder? Today, kill margins are still marginally profitable, but if beef drops too much more, we're going to start to see that margin dissipate. And I think the packer will play a harder ball of baseball with the cattlemen.
Yeah. They've already slowed down the kill quite a bit. How much more can they do that? Because their margins are in the red already, aren't they?
Yeah, but you just can't back up cattle forever. I mean, putting heavier and heavier weights on is not the solution longer term, although it is providing some filling of some holes nearby. But I believe if you think about longer term, heavier weight cattle are never bullish to the market from that perspective.
Yeah. Do you think we got any push at all from the Japan trade deal, or is there any trade deals that really could move the cattle market any more than we already have?
There may have been a little push from it. I mean, the Japanese have been good friends in buying U.S. beef, and I continue to think they'll do that. But I don't think there's any fresh or big new demand that's forthcoming. I would imagine that a lot of the rally is still just trying to see what consumer price what price the consumers will slow down. And so that's what the cattle market has been about for the last few months. So far, we haven't seen the consumer slow down dramatically, but this latest downturn in beef is my attention. So watch that very carefully.
Very good. Milk market, Class 3 futures down into contract lows today. And this milk production report kind of caught the market a little off guard, didn't it?
It really did. When you look at cattle numbers, they continue to increase. When you look at milk production, summer weather's been favorable. New feed supplies are headed our way. And so we have an oversupply of milk again, which the market's trying to ration. So, you know, the cattle, the dairy farmer's always been in this position of every time he gets close to a profit, we see this expansion. We're back at it again. So my expectation is we may have to fall down to $16.25 per hundredweight before we forge a bottom. I'm actually quite positive on milk longer term based on world markets, but we just have too much oversupply here in the U.S. here today.
Yeah, I was going to ask you how much lower you thought we were going to have to go to price this in. So we have a little ways to go yet.
We still have a little ways to go. We need to send the message out again about expansion, maybe to get some more of those cattlemen to breed some of their bottom end of their herd, if you will, to an Angus or something like that, because we don't need as many replacement animals for dairy herds as we have today. But I think that's where the market's trying to go with this message longer term. And so 16.25 should pretty much bottom the market as we see it, 16.5. And then, like I said, milk protein is still the cheapest protein in the world. So I'm expecting as we head into the end of the year, there will be a recovery.
All right. Thanks for joining us, Dan Bussey with Ag Resource. This is Markets Now.
You were right.
You were right.
You were right.
Well, you were right. When you choose your seed brand, there's winning, and then there's...
You were right. Should have gone with Brevant seeds.
When you choose Brevant seeds, you don't just win, you get to be right. Don't just win, win. Talk with your retailer or visit Brevant.com/win to get started.